Good afternoon, everybody, and welcome back to Fast CPAs and Consultants. Here we are with our CPA. Good afternoon, Fulton, and welcome back to our Tax Talk series.
Thank you, Monica.
Okay, so as you may remember, in this video series, we are talking about the different tax strategies that you must follow according to your situation. And we will answer all the questions received through our social networks and email. In this one, we are talking about the second part about Firpta. Fulton, are we ready to continue?
Yes, we are.
Okay, so here we have the first question of this part. Who ultimately is required by the IRS to collect and pay the foreign seller tax?
There are two different parties. The closing agent, as I said before, in the previous video, there is always an intermediary between the buyer and the seller here in the US. This intermediary is many times an attorney, not necessarily an attorney, but many times an attorney. It's called the closing agent. The closing agent is the one that holds the money from the buyer when the seller has satisfied all the obligations about the title of the property. The closing agent releases the money to the seller, and the buyer takes ownership of the property. The closing agent is the one obligated to collect and report to the IRS the Firpta 15% from the sales price of the property. He is the one obligated to collect either the 15% from the sales price of the property, or if there is a Firpta certificate, an exemption, the Firpta exemption, the closing agent will withhold only the amount that the letter says that usually is the 15% over the gain of the property. Keep in mind that to apply for that, you have, as I said before, you have to have at least 90 days. Otherwise, you will lose and the time will expire because the closing agent will have only 30 days. Many times, closing agent don't give you 30 days even, not even 30 days. They 15 days or 1 week to do the actual presentation of the certificate. If you don't have it, then say that we cannot wait anymore. They send the money. So they are the ones collecting and paying to the IRS, sending the funds to the IRS. Later on, at the end of the year, the seller is obligated to file a tax return. It is obligated to get the money back from the Firpta withholding if there is no refund, meaning if there is no certificate for exemption. The seller must file a tax return with the objective of claiming the portion of the withholding that is not taxes over the gain. And with that report, the foreign owner, the foreign seller, will have to file also for a tax ID. So there's two parts for this filing. First, you have to file for a tax ID, personal tax ID. And then within the same return, once that is approved, then a revenue officer will review the case and will approve it, or will require more information if the list of expenses that you are producing in the application is not satisfied with proof, with actual bills, invoices that you spent from any vendor in any language that there is. Well, I would say English or Spanish. Because other language will be difficult, say like Arabic or Hebrew, that will be difficult, right? English and Spanish will work because here in the US, English and Spanish works. If there is any other expense, then it will have it translated with a certified translation. But if that is the case, then you have to have proof, you have to have substance. And if the revenue officer sees all this information and is in agreement, he will approve it, and then he will give you a refund. So the closing agent withholds the money. The seller, the foreign seller, is the one in charge of filing the tax return to claim the money.
Okay, got it. Thank you. And who is considered a foreign person under Firpta?
Anyone not holding a US residency card, or not having a US naturalization certificate, or not having a birth certificate in the US.
Okay, understood. And who signed Firpta certificate?
If the Firpta certificate is for the exemption of the tax, of the 15% tax, the revenue officer is the one signing the letter that is the ultimate proof for the Firpta certificate, meaning that for the Firpta exemption. If it is for exemption, if it is for the Firpta itself, the Firpta, whenever there is a withholding of Firpta, it's the closing agent, the one who signs the letter to send the funds to the IRS. And this is electronically. There is no check sent. No, this is all the funds are sent electronically, and he signs electronically the certificate that is sent to the IRS with the Firpta withholding of 15%. If on the other side, you already applied for a Firpta exemption certificate, the Firpta exemption certificate will be signed by the revenue officer from the IRS.
That's clear. And what is the purpose of Firpta?
Is the avoiding of not paying taxes for foreign citizens holding or investing in real estate in the United States. That's the basic objective. And when they force to the buyer to withhold 15% from the seller's funds from the purchase of the property, is creating the urgency for the application on a Firpta exemption with the IRS to pay the tax in advance. That's a real objective of the Firpta, to pay the tax in advance. Either you pay the 15% over the sale of the property, or you pay 15% over the gain. But the second one is determined by a revenue officer, and then the revenue officer will sign a Firpta exemption and will agree with your determination of the 15% tax under the gain, because you send the calculation, you send the papers, you send the calculations of the 15% of the tax, the proposal, and then the revenue officer will say, yes, I agree, or no, I do not agree, and these are my observations, and this is what I say that you have to pay taxes, and he or she signs. And then with that letter, you go to the closing agent, do not withhold 15% over the sale price, withhold the amount that the revenue officer has approved. And then at the end of the year, if you still want to claim the refund, because there are some refunds sometimes depending on the amount of the 15%, there are some exemptions when you file your return that still you are able to claim, let's say it's a little refund, it's not big, but still is able, you claim some money if you want to.
Got it. And how do I fill out a Firpta?
This you have to do with an attorney, with a certified public accountant, with a CPA. Basically, you start with some forms 8822, and then you have to fill out the information that is provided for the sales price, and then who are the owners of the property. If there is one party, then it will be only one certificate. If there are three parties, or the number of parties that are involved in the ownership of the property, then you will have to provide one 8822 form for each one of the property owners. Because whenever you send the documents to the IRS, they will see the title. So the title of the property say name 1, name 2, name 3, and then the certificates for the Firpta will need to go with the same names as are on the title. And with those names on the title, we'll have to also file tax returns individually for each of the names that are on the title on the property.
Understood. Well, here we have the last question of this video. Who is exempt from Firpta?
The exemption from Firpta is basically only one. I mean, say three, as I said before, is anyone who has been born or is born in the US, anyone who is born in the USA, anyone who is a naturalized citizen, has come to the US and became a US resident, and then became a US citizen by naturalization process, and whoever is a US resident, whoever is holding a green card, a birth certificate, or a passport. There are cases, for example, for residents with H-1 visas or residents with investment visas. They are still subject to Firpta because they are not US citizens or US residents, even though they have social security numbers. They have to provide a proof of residency from immigration. This is a US resident card, a US natural, or the US passport. That will be the ultimate document, US passport or a US residency card to prove that they are US citizens or US residents, and they are not subject to Firpta.
Okay, understood. Well, thank you.
And in addition, remember, you will also be exempt if the buyer of the property will give you a letter stating that he or she are going to live in the property and are going to use the property as a primary residency, but they must be US citizens or US residents, remember.
Okay, great. Well, that's it. Thank you, Firpta, for this detailed and helpful information. And thank you, everybody, for joining us and for watching us. Remember, we are going to make more videos where we talk about these all different tax strategies that you have to keep in mind. You can check on our channel the different topics we have already explained. And in case you have further doubts, please do not hesitate to contact us by sending an email or write it down in the comments. And you can also follow us on our social networks, like in Facebook, where we have an exclusive group. You have the link of it in the description of this video. And of course, be sure to subscribe to our channel so you can be notified when we publish a new video about taxes. Thank you again. Thank you, Fulton, and see you everybody in the next video. Bye-bye.
Bye. Thank you for watching us.